The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street. You just want to hug me, don't you? Just admit it. You can do it. You can come forward. You can testify. And I will testify that this market is having that giant sucking sound. Where's Ross Perot when you need him? I need to get that as a sound clip. I'll find it. Anyway, we're at 1948 and 19 cents on the S&P cash, off 24 points. And, of course, normally when we come in here, 1.8, 1.9, maybe 2 billion shares on the consolidated tape. Maybe on a big day, maybe 2.1. 2.1. Oh, there's my Windows 10 booting, I think. Ooh, I've been installing it in the last hour or so. Maybe we'll get to that. I'm going to have to play with it after the show. Anyway, what else do we have going on here? 2.5 billion shares as we start the show. There is let there be volume, folks. Let there be volume. And there was the calm in the land, as there was once again a volume in these markets. Of course, big sell-off, and you just have to look at some of the other markets out here, like the NASDAQ off 70 points, 233 points off on the Dow, which I don't talk about much because it's not really an index. It's 30 choice companies that are 98% institutionally owned, and all you got to do is sell 10 shares or buy 10 shares to move it up and down. But a lot of the rubes will spend a lot of time looking at the Dow. But 30 uncorrelated stocks, I don't understand what they have to do each other. And, of course, any kind of statistic class would say that at a minimum, you'd need to have about 337, depending on which way you wanted to go. But I think even a plus or minus 5%, you'd have 337 shares, and I think plus or minus 2% is only 370 shares. So I spend most of my time looking at the S&P cash. Of course, the NASDAQ's just as bad, or maybe even worse, with the top 9 stocks being 52% of the NASDAQ now. So it is yet another index that is heavily weighted and useless. Other than, I guess, if you want to play the index through a future. But for the most part, worthless. For truly accurately representing the stocks in that index. But I digress. And, of course, going to have to put yet another digressing award on the fireplace this year, I would imagine, because I've digressed far too often. Of course, I said in my newsletter, if we broke the 1960 level this morning, we're probably looking down around 1900 at some point. And my guess is that we've had a break. We've had it with volume. And we're probably looking, I would imagine, into a low sometime around next Wednesday. That's my guess right now. That would start the next operation downside cycle. And maybe we'll see it before next Wednesday. But I think we're probably going to see the first bounce at about 1900, 1905, something like that on the S&P cash. With this kind of movement out here, and, of course, things going from bad to worse, and the zombie apocalypse starting with Ebola, it's going to be tough. And, of course, fat fingers in Japan. I mean, there's so much news, you hardly know what to do with it. But, of course, when news breaks here at TFNN, I'm here to fix it. And we'll get into the news here. In history, on today in 1908, the first Model T rolls out of the factory in Detroit and starts a radical new idea of the American working class having a car. By 1927, Ford had manufactured more than 15 million Model Ts. Also on this day in 1970, Walmart goes public over the counter, issuing some 300,000 shares at an initial price of $16.50. Wall Street yawns. How could there be any growth in selling cheap junk to small town yucks? That's what they thought, because, of course, that's the way they think. They're in a big city. Everybody lives in flyover country. And, of course, eventually old Walmart eats them alive this day in 1970. Other things of going on out there is random acts of journalism. I've been talking about Apple not being really covered by the tech media as of late. And the reason why pretty much was that you would be excommunicated by Apple if you actually did cover them. And we see two companies, a German magazine, which I can't even pronounce, and I took German. I took 2 years of high school German. Still can't pronounce it. But them, and on this side of the pond, Boy Genius, which is a kind of a techno blog that gets a pretty good following out there, have both been told that they are persona non grata at any kind of new product launch because they basically covered the Bingate a little bit too much. And I suspect that maybe some of the other tech people may start to turn now that they know that free speech is only for those that give glowing recommendation to the Apple cult and the cult of Apple. But kind of interesting out there. Of course, bigger issues out here are don't buy the GSEs. And, of course, they've been all pumped up by a bunch of fund managers thinking that they would get into a legal battle and get a settlement. They basically got paddled on their behind and told to leave court and never show their face in there again. And, of course, the lawsuits were on Fannie Mae and Freddie Mac. Both of these off just about 35% today. And this wasn't kind of, we'll appeal it kind of stuff. This was basically a judge saying that because the way the law is written, if someone wants to come in and take over your company, i.e. the government, that it's no different than Putin. That if he says that that's what it is, that's what it means, and you ought to get out of my court. And while I think the law only applies to GSEs, I think what this means is that you are a fool to invest in a GSE from now on. That law basically says that they can take it at any time if they feel a little nervous, and it doesn't define what nervous is. All they have to do is be nervous that maybe something bad would happen. I suspect this will mean the end of GSEs, as Wall Street will not want to be on the sucking sound side of any of these GSEs, hopefully in a future lifespan. But probably a good thing. It's going to get the government out of these for the most part, we could hope. And maybe some calm and reason will come back in. We've talked about the car business and the car loans being a problem. I've talked about it for probably about 8, maybe 6 months. What did we see today in financial journalism? Well, it looks like there's a bunch of bad loans on cars. And some other stuff coming out there. And hopefully, if I'm doing my job, I'm talking about things that happen in the future. If it's not a few days from now, a few months from now. Now, we saw a lot of rumors last night about a potential for hedge funds to blow up and some forced selling. And it seems like the forced selling was probably in a few of these funds that had huge amounts of GSEs. And they apparently the news leaked a little bit early yesterday, and it looked to me like there was some massive selling in those and dumping. We've seen that in the last couple of weeks. I suspect we're probably going to find out in the next day or two exactly which one of those funds were. But all the names with the bright-looking guys with the manager gray hair were out and about in this, and it is going to be kind of interesting as the days go forward and we find out who basically ate it and is on the new bread line on Wall Street. Talked about Windows 10, had a rollout yesterday on what it is. Going to be very interesting. Supposedly going to be, they skipped Windows 9, and I guess they scrapped it, although they really didn't say that. Looks like what was supposed to be January is now going to be probably March. But I watched the entire rollout last night in the comfort of my home via the internet. That's a kind of an interesting idea, that internet, don't you think? We've got some people making comments in the my IMs here. But now Microsoft has cut up with Apple. Don't think so. I think actually Microsoft is taking a jump with a operating system that will be universal across phones, tablets, convertibles, laptops, and up to 100-inch screens. The technical preview is available to download and comment on if you want to install it on your machine, and you're technically able to. I'll be glad to give you the link, but you can just Google it and find it also. But interesting, you can download it and install it on your machine and become part of the feedback process of what will be Windows 10, probably March, maybe February, but probably March. They're going to give it a couple of times, but you can also find that video of the entire 40-minute presentation from Windows and Microsoft yesterday. But I think they've got a lot of stuff going for them. I would not be selling them short anytime soon. They are probably going to pull back with the rest of the market. But I think them and Intel probably have better positions than a lot of people think these days. And if it was something that was ripe for a pullback, I would look more at Apple than I would look at Microsoft, although a lowering tide lowers all boats, and I think we're going to see that soon. Angie's List, another one that is going down the tubes. Today's big deal is that they're going to find someone to buy them out. I might ask Tom in the next hour what he thinks is a business proposal. I know what I think. But you got a company that's been around for 15 years, wasn't able to make any money, went public, pretty much burned through all that cash running a bunch of ads that still didn't make them any money. They've got a company called Yelp that does what they do for free. But, of course, they're up, we're up 25% earlier. They're up 20% now, running the shorts. And, again, if you want to get rid of some shares on a company that's going to go belly up, you just keep coming out with bogus stories like this. Same thing with BlackBerry. You milk it for all it's worth, and when it goes bankrupt, the crows will come down and eat what's left, because those crows are always attorneys, and they will pick at anything to make sure that there's nothing left, even for the bondholders. But Angie's List on the Walking Dead list of, I think that starts this Sunday night. Ooh, I got to put that on my calendar. Walking Dead, back on AMC this Sunday night. Anyway, old Angie's List up a bit today, but again, highly short, and they'll pop it for a few days. Another one of these stocks that just doesn't know it's dead yet. Kind of undead, but mostly dead. We'll be back in a minute. Give me a call, 877-927-6648. We'll be back with Pat in MA in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
1948. We're going to go right to Pat in Massachusetts. How you doing today, Pat?
I'm good, Dave, and you?
Absolutely fantastic.
Good.
Couldn't be any better. I'm making so much money that it's gonna be scary.
Oh, that's a good thing.
I'm scaring myself. Anyway,
I'd just like your opinion on Mobileye. She seems to be stuck in the trading range between 55 and 46. Do you know when that breaking range is going to break the range?
This hasn't been around that long. Do you know when is the lockup already over on this?
I do not know.
Okay, let's check that out
I think it was September.
It's MOBI, NASDAQ, lockup. Okay, here's the page from them, and I will put it on Tiger TV here. Where's that? Move to new window. There we go. So I'll pop it up right here. If you ever have those questions, you can always go to the NASDAQ website and look down here. Lockup expiration. Oh, this has been around for a while. I thought it was newer than this. Okay. Nothing out there.
No.
Maybe just because I had heard of it lately and not before. Okay, let's see. Shares offered. Okay, 58 priced. Okay. Good enough. Don't have to think about that then. Okay, and let's look at the chart out here. You're up against that gap.
Yeah.
I mean, to me, this thing looks like in a trading range between $10.56 and down here to probably you'd want what, $6.75, $7 maybe. It was where you'd look at buying it if volume remains low and the market decides to move up. But if you listened to my show yesterday, I probably have 200 stocks that have broken below these gaps on lighter volume and continuing down. So it's going to be kind of difficult until you see at least some level of support in the overall market. But it is kind of interesting to see how many of these stocks are coming down with lighter volume, but then blowing apart when they get past these and volume coming in. And today, volume coming in is going to be very interesting. Just as a chart-wise thing, certainly looks like you'd want to get 675. You're not already long this, are you?
No, I'm not in it yet. I wanted to be long because today it's around 50.
Yeah.
20. So,
yeah, I would say you want it to fill about at least half to 2/3 of this gap. I mean, that gap happened on 8 million shares. You're into that candle already. But normally, at least what I've been seeing on even the stocks that have bounced is that you're getting half of these gaps filled at least to 2/3. So I think you want to be in there with light volume. You may only get a few minutes to buy the thing. It may only be down there for a little while. But if you think that you want to buy that and be long, that's where I'd say, if you wanted to be conservative, 675. If you wanted to be a wild person out here in the markets, $7. But, like I said, I think what you're going to see is this thing, the S&P probably pull back to probably 1905, 1900, something like that. Maybe just guess it. But I have a feeling that we're probably on the downslope until next Wednesday. I think at that point, options expiration is going to take over. We're probably going to have at least a bounce up for maybe 7 to 10 days.
Okay.
At least what is what I see now. So I would say you're getting close on this, and I like this kind of sign of strength up here on September 17th. So not a bad looking chart. It's just that all these charts have pretty much failed. I've got at least 200 stocks that I've seen that are set up just like this, and they've gone right through the bottom of it. So just be very careful. What I would probably do if you got the $7 or $6.75 is I probably would have a stop below that day that it gapped up on 8.15, which the low of the day would have been, 6.45. You probably want to put it in like 6.40 or something. And I wouldn't want to be back into it because if it does any more than that, it's going back to $5.92.
Mobileye?
M-O-B-I, yeah?
M-B-L-Y.
Oh.
That's where I was getting confused because Mobileye, M-B-L-Y.
M-B-L-Y.
Yeah.
Well, they put M-A up here in the thing, so. Oh.
No.
Yeah. No, they put M-O-B-I up here. Mobile, okay, M-B-L-Y.
Right.
Okay. Well, they put M-O-B-I here in the I-M. So,
that's where I was losing you.
Okay. Well, I've lost them too. Well, we know about that one. That one looked good. We'll come back in just a second. We got to go to the break. I'll look at this for the lockup period on this. We'll be back.
Thank you.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we come back, of course, a lot of confusion before it. Do we still have Pat on the line?
Yeah, I'm still here.
Okay. Well, we had MOBI for the symbol, which was not the symbol, and I didn't think to investigate any further, so there was somewhat of confusion out here. But we are looking at the right stock now, and I thought that this thing had only gone public a short time ago. And the reason why was I was pretty sure that there are no shares really outstanding per se, right? And
yeah.
If you go to the NASDAQ shop, this is normally what I do. I just type in Google the symbol, NASDAQ, and lockup. And normally you find this, and you find this page, and it will tell you where the lockup expiration is, how many shares are out, and what's happening, right? So what we know is there's 27 million shares trading out of 212 that are going to be available the 28th of January. So the problem is, in their scheme of things, they can probably do anything they want with the stock and put it anywhere. And it's up to their whim and will because there are no shares to really trade. I mean, I would imagine that 22 million of those are locked up in other people that can't trade them until that 28th of January. And the 5 million that can is everything that you're seeing, be batted around day to day by day traders, and that's about it.
Okay.
So the problem is that you just don't have any liquidity in the stock compared to the outstanding shares. If you've heard me talk about sliver deals before, this was one of them, and that's why I went to this page right off the bat, because I kind of vaguely remembered it as one of those sliver deals, i.e. such small amounts of shares to really what's outstanding. It's kind of like asking 5 people who are going to vote for president and expect that to be what happens. We all know that you need to have kind of a representative size, and normally they'll ask 1,500 people who are going to vote for president, and it'll be plus or minus 5%. Well, you get such a small percentage in these shares, of which most of them are locked up probably by Goldman Sachs and a handful of other people on Wall Street that can't trade them till that date. All they have to do is go in there and buy 500 shares, and they can move the stock up and down 50 cents.
Okay.
So my thought on this particular stock is they've got it pretty much where they want it, and that's going to be it. This thing's going to go sideways. Maybe you'll see a few people try to get out of this thing, but my guess is lower and lower volume till you see a lot of these IPOs come out of lockup. If you listened to Tom's show yesterday, we were talking about the lockup in GoPro, another huge sliver deal where they can put the stock pretty much anywhere they want to because there's so few shares outstanding compared to what's going to come out of the gate. And we compared it. I posted some thing in the den about KKD, which is a good example of that. If you go back and look in time, where, I mean, they ran the stock up to whatever it was, pre-split, I can't even remember. And then, of course, the whole thing fell apart as soon as all the shares that were available went up for sale. And, of course, everybody inside the company sold them. And, you know, who knows what's going to happen when these shares become available. All I can tell you is that it's going to be very tough to trade this thing because you're basically wondering what Goldman Sachs and the rest of the crew out here on the IPO trail decide to do. Do they decide to sell 500 shares or buy 500 shares today? And that's what moves the stock.
Right, because, well, I did talk about it yesterday with Tom, and it seems like it's been stuck in this $55 to $46 range.
That's where they want it.
Okay.
I mean, the way that these IPOs work, especially these sliver deals, is that they get a bunch of cash and shares. So what they want to do is make sure this thing just gets real boring and no one pays attention. It comes up to that IPO lockup date, and they're able to exit stage left at a very high price. And that's how a lot of the money is made on Wall Street. So it's not uncommon to see stocks like this go sideways right into IPO lockup. And any of these new things that don't have a lot of history, that were kind of bogus IPOs, just look at Angie's List, ANGI. That was another one. I knew that one stunk to high heaven to begin with. I'm not sure about Mobileye other than it was a sliver deal, so who knows? But the question is going to be, when all those shares come to market, what do you want to be in that one? And do they want to push the stock up even more? I have no idea, because it's basically a handful of people in a couple of rooms on Wall Street. When a stock has a lot of shares trading, then you get to see what the Jesse Livermore called the composite man. You know, some kind of trend, a belief. But when it's just a handful of shares moving back and forth each day, being manipulated by a couple of Wall Street firms, I don't know how you trade it.
I see.
And to me, they could hold the stock up, you know, since they've only got 1/10 of the shares out. They could hold it up fairly well. Of course, it's down today, but, you know, the problem is it's almost impossible. But you don't own it?
No, I was looking to go along in it because when I read about it, it was like the U.S. government wants to put it in all the cars for safety.
Yeah.
So
it's an interesting idea. I don't know how you trade it, at least from a chart perspective, other than wait for the IPO lockup to come out, because that's I'm just from this pattern and seeing how thin it was to begin with.
Yeah.
My guess is that you're probably going to see a move like Twitter. When their IPO lockout came out with a lot of them, they may be good stocks, but you may get an opportunity to buy this 50% off this $50 price point.
Oh, beautiful. Dave, thank you so much.
You bet. Just watch all these sliver deals. We've had a mountain of IPOs coming out, and if these stocks don't have a history, go to the NASDAQ webpage, see what percentage of the shares are trading. If it's something like 10% or 5%, probably the most egregious one of these stocks was Caesars, who I think had 2% of the shares at their IPO. Mm-hmm. You knew that was a scam going out the door. Or at least I believe it was. I don't know if legally I could convict anybody in a court of law, but it certainly stinks to high heaven. And even 10% is bad. You'd like to see 25 to 50% of these stocks to get any kind of idea what it's truly going to do. But watch out for these lockups because they're going to be coming hot and heavy. Like I said, GoPro, the 23rd of December. I'm getting ready to put a long list of these things together because if this market starts pulling back, when these insiders get a chance to sell, they aren't going to even think and blink. They're just going to click, click, click.
Sure.
Okay?
Dave, thank you so much.
You bet.
Thank you. Bye-bye.
Bye. Okay, and what else do we have out here? Okay. Got to get back to the news already in progress. We were talking about Angie's List. That's a great stock to look at, especially because it was such a stinky stock to begin with. What was the other one? Groupon, another business plan critically flawed in the fact that anybody could do it. There were no barriers to entry, and we pretty much saw what happened. But these stocks are going to come down there. They're going to churn as long as they can stay in the ball game for a while. But eventually they'll all take a year or 2 years. The thing will slowly exit stage left after they've burned up all the investor money. Of course, Ebola has put a hitch in the get-along of the airlines. Almost all of those were down, 3-4%. This is probably at the beginning of the show, so it's a little bit. But if you're looking at the Ebola effect out here, certainly in the airlines, and I saw a doctor basically saying there's absolutely no way that this will ever become a big problem in the United States. We have good doctors and everything. And about 7-10 days ago, I saw another doctor going, there's absolutely no way it's going to make it here to America. So I don't know if it's the famous last words before the zombie apocalypse, but God, I hate people to say that it couldn't happen. I'd like them to think that it could happen and be on guard, then tell everybody there's nothing to see but move along. Ebola, these stocks tell me that stock traders think that something could happen, and that's probably a lot more what's happening out here. Obamacare lost another round, and it's heading to the Supreme Court. What we should also know is that in the next few days, of course, next Monday is the first Monday in October, and the Supreme Court will be showing up. I suspect that we're going to see all these cases set, and we're probably going to see a great deal, but there's I think they're 15-0 or 0-15. They've lost 15 straight cases on this issue so far. The issue is whether or not the law was written correctly in that the states have to come up with the cash, in which case Obamacare is going to go on the ash heap of history. Unknown what the Supreme Court will do, but everybody pretty much downstream from them all the way to these appellate courts has basically said, no, it's pretty plain, that's it. Now, I think you want to be watching how these healthcare stocks react over next week, but I imagine we're probably going to start seeing hearings, and we're probably going to know in I would imagine the first, probably October or early November, they're going to have hearings on these, and you will hear probably which way the wind is blowing, at least in the Supreme Court on this, and how it's going to affect a lot of these insurance companies, so be aware of that. I think that some of the other stocks that are already moving on the way the elections are going are those solar stocks, and knowing that how soon those subsidies are going to go away. Also, I guess in the news today was yet another solar company, much like Solar City, going public today, and they decided to come out at about 30% discount to what they said that they thought that they would get for the shares. I think that gives you a good indication that, one, they didn't think things were going to get any better if they waited a couple of weeks, and two, this was the end of the gravy train from them to get in and sell out some shares. So keep an eye on that. It is a mad market, and we will keep an eye on it. If you want to give me a call, do so at 877-927-6648, and I would appreciate it. And we'll look at some other stocks out here, but just everything getting kind of smacked around, and I don't think that there's a lot we can really tell until the end of the day out here. Again, 1948.93 on the S&P cash off 23 and change with 2.8 billion shares, and this is going to be a big day. This is going to project out at this time to about 3.9 billion, maybe 4 billion shares by the end of the day. And that should tell you a great deal if you watch it. Of course, Tom O'Brien will probably be giving us the volume for the floor-traded stocks in the next hour. I tend to look at the NYSE consolidated tape, which is the American Stock Exchange, and all shares of stocks on the NYSE, whether they're traded on an ECN or they're traded across the floor, in which case I think less than 5% are actually traded at the New York Stock Exchange anymore. Almost all of them are traded electronically, even if they go through the NYSE as the aggregator of those shares. But 2.8 is some wicked volume out here. And again, we probably ran through some stops today. We were probably going to continue to see some margin calls based on the moves in those Fannie Mae and Freddie Macs, along with the Japanese fat finger, which kind of got everything started this morning. If you haven't heard about that, since they don't have any humans involved in the not touched by human hands. I always love that little thing around the toilet. They used to give you the sash across the toilet, not touched by human hands. But anyway, since there are no human hands in the way, someone stuck in through a fat finger order fairly early in the morning, a huge order for about, I think it was 100 or 1,000 times more than they actually wanted before it even had time to blink, caused a hitch in the get along over there in Japan. But I haven't had time to go back and look through all that and read through it. Maybe Tom has had time to look at it, and we'll comment it in the next hour of the TFNN, over most of this TFNN.com radio network. Other things I wanted to talk about out here, just how many of these stocks bounced off the lows. We went up to about, 1962. That's probably a good indication of where you want to be watching how these markets bounce back up, because I think they're going to give us a good indication when we get down to 1905 or so and get into the B to C leg of this move, just where we're going to want to reshort the stock after we cover our shorts for an ungodly amount of profit. I'm almost up 50% on one, so I'm feeling, I don't want to get, I probably shouldn't shake my fist at the trading gods. But I think we've got some great positions in all the newsletters out here, and some of them doing very well. Got an option position up here that's getting to 100%. So, and it doesn't expire until December. So I've got a lot of time on some of these. So I'm having a good day. Give me a call at 877-927-6648. If you have any questions, as some people did. I think we'll answer some questions from email when I get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go to John from Sarasota right away here, the last few minutes of the show. How are you doing today, John?
Pretty good. I was wanting to buy some JKS. I wanted to run that one past you and see what you thought.
I would think that you want to buy these solars after the election. The only way that any of these solar companies are staying in business is, of course, subsidies from the government. And those subsidies will be running out over the next 2 years. There is almost zero appetite in what will be right now probably 80% chance that the Republicans hold or get control of the Senate. And, of course, even if they don't, the chances of it ever getting through the House are zip. So
I think this is a Chinese stock, if I'm not mistaken. I'm not
right, it is.
sure,
but they're selling all those solar cells to Solar City to put on your roof.
I see.
And the only way that works is if you have huge amounts of subsidies, because it's still 4 to 8 times more expensive than buying electricity out of the wall.
Gotcha.
So the downside of all these things is everybody wants them to work. Everybody loves solar. It'd be great. Unfortunately, it's ridiculously expensive. And between selling the electricity back to the local power company at 2 or 3 times the cost it does by either coal or natural gas, so all your neighbors are paying for these things on your roof, and maybe you like that, maybe you don't. But what I'm saying is that the future for these things... Huh?
There's a lot of them, actually.
Yeah, there's a lot of them, but all these guys are... And, I mean, the real hit, the first time came when Germany quit their subsidies. And now most of the other countries out there, China's really cutting their subsidies. I suspect there's going to be a dumping thing from the world... what is it? The world... what's the name of the deal out there? The World...
IMF?
World Trade Organization, yeah. WTO. Okay. Basically, China lost big on the whole rare earths thing. And my guess is the next giant thing, we've already put on our own tariffs already here, but my guess is the next thing is going to lose big on all these things making their way through the WTO too. And so it's going to be really tough for these guys to not just come in here and undercut what we have is probably going to be a shrinking market here in the United States. Now, I would change my view on this if, one, someone truly comes out with a way to store solar power at a local facility, not a giant facility. You see these giant reflector farms out there, and they boil sodium and put it in the ground and keep it at 550 degrees Celsius. And, you can leave that in the ground for a week and come back and boil water and make power. Unfortunately, there's no easy way to save battery power in somebody's local house. That's one part of it. And the other part would be getting the price of these solar cells competitive with natural gas production, if not coal. And both of those are going to be tough. And the only way that works right now is the government decided to throw huge amounts of cash at them. And, of course, they threw lots of cash back to elected officials that pushed this. And if the power at B in Washington changes, my guess is those are going to be the enemies of the people that are in power then. And, of course, the House carries the purse strings of spending, and I don't think there's a chance in Hades that gets back through. So I would be extremely careful on all of these, especially through the election. Maybe you'll get a chance to buy these things at a huge discount. I would just be worried about those. I think that there's a reason why this thing is arguing back down to the lows.
Yes, okay? Indeed. Thank you. I very much appreciate that.
You bet. Anyway, we look at this thing, you probably look back down at 23 and see how it is down there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.